Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Kicking off a fresh new week, we are coming to you live from the CNBC TV 18 Motilal Oswal studios. Yesterday was a painful week. Can we expect a bit of a bounce is the question as we start this week. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, morning.
Hi, morning. Well, the US market managed to bounce back on Friday, but not that we are entirely correlated. But yeah, given the huge drubbing that the bulls have had, maybe they'll hope for some respite, some relief today?
Well, that's right. You know, the markets will be hoping to put in some kind of a base or some kind of foundation. And talking about foundation, it's my son Neve, which means foundation. It's his birthday. So hopefully the bulls can put a little bit of a base in place. And Neve, happy birthday, Papa's promise.
Well, wish him a very happy birthday, Nigel.
Thank you so much.
Well, let's just take it from the top, right, in terms of what you need to know as we kick off a fresh new trading session. And I'll start with, of course, the backdrop, which has been losses and more losses and more losses. And the picture comes up on your screen. That's a a table. 3% Nifty, mid-cap index down 5, IT down 8, real estate down 6, and the pharma index down 5%. That's just 1 week. Look at 8% knock on the IT index, right? And it started slow. Last Monday, this time, we were talking about the H-1B stuff, which had come out over that weekend. It started slow that Monday. Tuesday was nothing. But then, of course, losses picked up. And we finally ended with an 8% cut. So it's been quite painful, frankly. Now, just to say this right off the bat, I think if you look at a variety of short-term indicators, as far as the market is concerned, we are looking oversold, extremely oversold, actually. And that is the reason. 6 days, the market's fallen. But simple things like the RSI, etc., very oversold. I mean, we're due for a bounce. But are we, when I say a bounce, do we mean a big sort of rip-roaring rally or anything? No, I mean, I think the range still remains, but maybe we go in the other direction for a bit. Hopefully today, we'll see. Of course, the focus squarely is on US-India trade talks. And I was sort of looking at headlines, anything which has been said by the US side over the weekend. So Howard Lutnick, US Commerce Secretary, I mean, he made the comment about both India and Brazil, and it said that India needs to play ball with the US. This was with regards to opening up markets and markets to US companies and, of course, other stuff, etc. as well. Nothing from our side. There was that statement which was issued after the Indian delegation led by Commerce Minister came back on Friday. That was last week. We put that out as well, saying, well, talks are progressing and they'll continue. But I think this is the big one, which we will have to see. There is, a lot of stuff happening this week, right? 1st of October, you've got the RBI meeting. We've got a market holiday. 2nd is a market holiday, which is a Thursday. So, Thursday holiday, Friday, we come back for one-day session and go into the weekend. So 1st of October, which is Wednesday, is the RBI meeting. Markets are expecting a dovish pause. But I think given the state of things here, which is the rupee, which is equities, which is foreign outflows, it'll be an interesting one in terms of action and, of course, the stance and, question and answers, etc. as well from the governor. On the 1st of October, so as I said, lots happening on that day, there is a very high chance that the US government, federal government shuts down unless a last-minute deal can take place. President Trump, of course, is meeting Democrats, etc., to try and avoid it. It's not new. I mean, over the years, we've seen this over and over again with very little impact as far as markets are concerned. If it does shuts down, some data, etc., gets pushed out, including jobs data, which is due for Friday. There is also the start of the Chinese, Golden Week from the 1st of October, which means that there won't be any onshore trading from the 1st to the 8th. So a relatively quieter period as far as China and data out of China, etc. is concerned. US continues to remain pretty solid. So US markets were down for 3 days. Friday, they sort of came back up again. S&P is up 14% in 2025 so far. And about 54% of it is driven by earnings, which have come through. I mean, the rest is multiple, some, equity market multiple, etc. By the way, US 10-year real rates, YTD, have fallen from 2.25 to 1.75%. I mean, this is a big reason why equity multiples have had space to expand in that sense. But even without that data, etc., hard data out of the US continues to be extremely strong. And I think that's just the way it is. And equity markets have responded. In India, just to come back and before I get to the levels, massive amount of primary issuance. The numbers may not be, especially this week, may not be all that large in terms of number of, the size of IPOs, but 22 IPOs opening over the next 1 week and 21 listing, many which closed last week. I mean, they're going to be listing. So more than a couple every day, pretty much, I assume, and we'll sort of cover many of them as we go along. So just to sort of tie in the levels here, as I said, maybe despite all of this, perhaps just for the fact that the markets are oversold on technical basis, we'll get a bit of a bounce. The market is decisively closed below the 61.8% retracement level, which means that the next support comes in at the old support zones, which is 24,400 to 24,330, which is the prior lows. 24,400 basically was the low. So that becomes a support level. For the Nifty Bank, it's broken key daily averages and the 61.8% retracement. Support here comes in at 53,561. So I'm just leaving you with supports here. I mean, on the way up, there are enough and more markers. But I think maybe, hopefully, fingers crossed, a bit of a bounce here. GIFT Nifty will give you a quick sense of how we start. We'll pick it up from there. 100 points higher. So we've got to build on it as we open up. Nigel is standing by. He's walked across to the F&O side of things with what the positioning is looking like. Nigel, over to you.
Well, Prashant, you know, that GIFT Nifty suggesting a 100-point gap up, that's something that's making me a little bit uncomfortable. I'll tell you why. Because it's giving the bears some kind of order to come in there and sell into the markets. I would have preferred actually a softer start. So holding on to these gains is going to be extremely important. And last week, no two ways about it. You had FI selling, you had some HNI panic, and you had leveraged positions as well that got sold out. And the structure on the market has got, damaged. And the biggest negative actually has been the renewed FI selling. Because in last week, if you take a look at the sell number, it's much higher than what we saw earlier in September itself. So the average FI net sell number, that's what perked up. But however, there are a couple of factors that the bulls will clutch onto. One being the technical levels, whether you're looking at the PCR, the shorts in the system, and the RSI moving towards that oversold levels. So the hope is that we're reaching those stretch levels, and hopefully we see a bit of a bounce. And the next point is maybe some kind of NAV propping towards the half yearly close. That is, September 30th or so. So let's see whether or not that can provide some support, particularly to the broader market. It's going to be extremely important. What do the FIs do? Well, they added close to around 19,000 contracts. Short positioning moves up to around 86%. And in absolute terms, it moved to around 1.65 lakh contracts on the short side. So some shorts in the system, the bulls will be hoping to trap them on the wrong side, which hasn't happened till now. Now, remember, we have the monthly expiry that plays out tomorrow, and the rollover positioning comes up for you at around 48 and around 52% on the Nifty Bank as well as on the Nifty. So one factor is big shorts in the system. The second factor is the PCR has come down to around 0.63. This is the highest we have seen in more than a month or so. And normally at around 0.6, 0.65, you do see a technical factor that plays out and you do see a bit of a bounce. And that's happened because of the call writing. 24,800, 24,900 call. Extreme writing is what we're seeing on both those two strikes. While some glimmer of hope is that we saw some kind of writing at around the 24,600 odd mark, which brings us to the levels. The 50 DMA, that becomes your first reference point that you're looking at. So 24,850. That's the first level that could provide some kind of resistance. We'll keep an eye out on that. And the bulls will be hoping that this 24,500, 24,300 mark does hold out, because the last time around we bounced from this 24,300 odd mark. Pulling up the Nifty Bank, that was leading the way on the upside. That's given away some kind of, that's some of that advantage. So you have the 20 DMA, that becomes the first level of resistance. That's around 400 points away from current levels. So you'll want the Nifty Bank actually to get towards that mark. Well, on the downside, you don't want it to go to around 200 DMA. So that's the important mark that you're looking at. Moving to stocks that are in focus. Well, we told you in Friday's trading session itself, that RBL Bank, that could continue to stay into the F&O band. And that's actually outperformed the Nifty Bank. So this stock needs to be kept on your radar. The other one is Saman Capital. That's come out of the F&O band and we've given you a heads up itself. Also, towards the end of today, keep an eye out on the Nifty rebalancing. A couple of stocks will be in focus because of the flows, because that will be effective tomorrow. So today, we'll keep an eye out on Interglobe as well as Max. Both of them will be the stocks in focus because, both of them will be coming in. While the exclusions are Hero MotoCorp as well as IndusInd Bank. These are the exclusions. These are the inclusions. So we'll keep an eye out on all these names.
Okay, all right. We certainly will. Thanks for that, Nigel. Asian markets, by the way, are quite mixed. Some of the markets are seeing profit taking. Case in point would be Japan. But But then you've got the Chinese markets, particularly Hong Kong, which is doing quite okay. Almost a 1% rally going on the Hang Seng. So that's the picture across Asia. That's the implied open. So it's suggesting that we will get that rebound that bulls have been desperately seeking. Let's see if they can, sustain on this and then build on this as we get to our open. Well, let's get to the equity call of the morning. Rhythm Desai of Morgan Stanley expects earnings to beat in the next couple of quarters, the RBI to remain dovish, more reforms from the government and a likely trade deal with the US. He says the underperformance in 2025 so far makes a potential rally a significant pain trade for foreign investors. Okay, so Rhythm retains his bullish stance on India.